Stock futures still under some pressure here as we get bond yields popping following a really good surprise on the NFP. Joining us, Sohn is the chairman at Recruiter.com. Evan, thanks for being here again this morning. Always like you guys' take on the economy. So kind of give me your top line from this past week. What did we learn?
Surprised. We're all a bit surprised on the number of new jobs added. I think there are a couple of things that we're learning. One is that the open job number is not really a good is not a direct correlation to new job creation. We had speculated probably 2 years ago that the open job number was always inflated, was being inflated. And you can imagine, right? You're trying to fill a role that's hard to fill. Let's assume healthcare. So I'll have 3 open jobs for that one job I'm looking to fill. So it's really not as indicative. Obviously, there's a trend line there as well. But the open job numbers ticked down. The other thing that we saw that was really interesting, and we track through a partnership with an Aura job report, a number of the healthcare jobs in remote healthcare jobs really took a serious increase in May, like by 24%. So very serious growth in those jobs. And that's clearly in the job report was something that was really there. You really saw that healthcare increase in terms of the overall number of jobs. And if you look at the buoying of the job market and the new job creation has really been by 2 big sectors, healthcare and government. We had seen that hospitality actually increased this past month also. And it was good to see that those numbers are in there too. So unemployment ticking up to 4%. So certainly that's a better sign of trying to have this overall soft landing. But we're very surprised by the beat, if you will, in the job creation.
Okay, so to break a few things down there, to come back to the first thing you mentioned on openings, just want to reiterate that because that's really important. When we saw JOLTS drop by pretty much out of the range they had been in. Your point is that there is a little bit of leeway there because of double listings and stuff like that. That may not be like a one-to-one read on the health.
Yeah, that's right. In the old days, remember, posting a job in the old days meant taking a classified ad out in the local paper.
Yeah.
Now it's I'll put it on job boards.
Yeah, blast it out there.
LinkedIn. I'm going to blast it out as many places as possible. So there's clearly some duplicative. But remember, when the job market was crazy, the open jobs are 11 million open jobs. So there is a trend line there that there are fewer hiring. And as you said before, there's fewer hiring, there's less hiring going on, and there's less quitting going on. The quit rate is now at pre-pandemic levels. And what most people don't know, people always quit. Right, it's like 3.5 million people per month quit. So the state of the market, we track candidate sentiment, and candidate sentiment is fine. It's not bad. It's like 3.5 out of 5, which means that candidates feel comfortable quitting their job, knowing that they're going to go get another job. So in a tight labor market, it's not that bad. You could see that actually happening. So the hire rates were low. The quit rates were low relative to the overall pre-pandemic levels. Now, the problem is we track the recruiter sentiment. And recruiter sentiment is at a 2.7 out of 5, so it's low. But remember, when do you use a recruiter? Use a recruiter when it's either the very, very highly specialized talent that you're looking for, or the opposite. I'm looking for lots and lots and lots of volume. What you're putting on here now is a really big surprise for us, was like looking at the number of, and we sort of predicted this earlier in the year, shifting from degree-based hiring to skills-based hiring. And that slide you just showed before, that what we really saw this past month was people looking to hire regardless of degree based on the skills. And that would really align with the IT sector, right? When you are doing a test, you're doing an IT test. Hey, I want to know, can you actually do this sort of development? I don't really care if you went to college, et cetera. And I think that's a real change also. Look, you have the high price of college education and debt. Meanwhile, the job market, if it's tight, it's only 4% unemployment, and participation rate is where it is. I need someone to fill this role with the skills that I need. And that would really align well with IT sector, as well as like the hospitality sector. I think the healthcare numbers are about healthcare and health organizations shifting to remote and allowing people to access their healthcare provider in a telehealth model, because that would really allow those roles to be filled accordingly. And we think the government's been doing a good job adding back jobs that were lost in the pandemic level. And I think they've been buoying a lot of these numbers to keep the numbers moving, making, obviously in a more positive light on the government side.
Great analysis, giving us a lot there, a lot of meat in there. As far as the wages go and salaries go, I thought another interesting stat from your own data, just kind of related to job changers and movers, even though that's dropped off a little bit here. The salary levels, it seems like, are pretty consistent, and that employees are happy with that. So maybe they don't have the opportunity to kind of shift and get a bump at a new job as quick, but it seems like employment and wages are pretty stable from your data.
Yeah, right. That's absolutely true. We really saw 71% of the recruiters saw that salaries were stable, with very little on the upside and a little bit more on the downside. So salaries coming down, which is good for the economy. It was a point in time where in order to get the talent you wanted, you were paying 15, 20% premium, even more in some instances. So there was hire at any cost, grow. We saw that happen with companies that overhired, whether it was the big companies, Google, Microsoft, just really overhiring. Facebook was known for overhiring. They've cleared those out, got their OpEx in order. And I think that when we see salary levels being stabilized, that means that you're quitting because you want a better job. You want a better, more interesting job. You don't like your manager. There's a reason that you're quitting, but you're not quitting to go get a job that's paying you 15, 20% more.
Great stuff, Evan. Glad we got you some really good details here. And it seems like your guys' information as well also fits pretty well with this data, especially when we see the wages side firm up too after a week in which the rest of the employment numbers were a little soft. So I think you've given us some good perspective on how to marry these information together. Appreciate your time.
You bet. Thanks a lot. Have a great day.
Absolutely. Evan Sohn, chairman at recruiter.com.